Well, yeah, sorry. 3, 2, 1. This has already started. Take one, another episode with Christian here. How are you, Christian?
Very good, thank you. Hello, everyone.
Oh,
How
well,
are you, Saeid?
I'm doing very well. Thank you very much. Like I said before, bit of a cold, but I think I'm all good now. We had an episode about mortgage, and I had a lot of DMs and inquiries for that they were interested to find out more. I wanted to I just wanted to touch on this again. Are we 100% sure? This is one of the common question that as a non-resident, somebody who doesn't live here, doesn't have a job here, have may never been here, especially never been here to the UK, can they actually or could they be eligible? Can they be qualified to get a mortgage here in the UK?
Yeah, it's a piece that we get pretty much on a daily basis, isn't it? When we're speaking to clients, are you sure? Is it the case, even though I live in Nigeria or I live in India, that we can get the same mortgages that you can get as a UK national? Definitely is. 100% it is the case. As we mentioned on a previous filming, the mortgage is dependent upon the property rather than the applicant. It's dependent on the ability of that property to generate a rent that will cover the mortgage and for there to be surplus. So the typical rule is that that surplus on a monthly basis will then cover should the property be vacant for 3 months of any given 12-month period. And as we've discussed, any property that we've ever will sell in the future will always give you that amount of lee room that it's going to be covering your monthly payments, plus there's going to be surplus to cover that kind of eventuality. Now, the chances that there's going to be a 3-month void period is quite remote, but you never ever know, do you? So from a lender's point of view, they always want to have that peace of mind. But yeah, the lending criteria is very much based upon the property rather than the applicant themselves, which is different to if you were applying for a residential mortgage here.
All right. I think I was going to ask the question about why. Why is this okay? Why does this happen? Why, if you live in a place like Nigeria or maybe, I don't know, Turkey, why is that not allowed in those places? Maybe that's not a question for us. But knowing that it's not allowed, or countries or financial institutions do not allow that to happen, maybe we can talk about why is it allowed? Is it about the fact that, and maybe some people, some of the viewers are not familiar, it's this concept of buy to let that makes this happen. And so can you tell us, like, why is this allowed? I think if people understand the why, it can help them to sort of accept it and digest it a little bit better.
Yeah, absolutely. And it's a case of looking at it, isn't it, from the company doing the lending, from that lending institution's point of view, assessing it how that they would assess it. So they're assessing it on a risk base, and they're looking at it. If we loan X amount of money, is it likely that those monthly payments are going to be repaid? It's a simple equation as that. So the evaluation then takes place, as I say, on the specific property, not on the investor. And because they're raising a mortgage on a UK property, we all know about the safety and security of UK property, and this just goes to prove it that large financial institutions are prepared to loan hundreds of thousands of pounds to foreign nationals that they don't know from Adam, because they know that the UK buy-to-let model works. And it's I haven't got a lot more to add on that. So often you'll ask me a question and I'll still be talking 5 minutes later, but it is that straightforward an equation of the financial institution looking at it on a risk basis, seeing, right, this is for a buy-to-let purpose. That property is going to achieve X amount in rent, which is more than going to cover that mortgage payment. Therefore, Mr. Mrs. Client, we will give you a 75% loan to value on that particular property.
Well, I think one of the reason that this also happens, obviously the value of the property, it has like increased over the last 2, 3, maybe 4 decades for sure. I mean, historically, it has always, with a minor like fluctuation. Overall, there has been an upward trend everywhere in the world. I can tell you that. And I know it's been the case here as well. So when people make the argument, it's because the value of the property has been going up here in the UK. It's like, yes, true. And that is a good reason enough for financial institutions, for lenders, to like one reason to justify the reason to give you a mortgage. But I think in addition to that, it's this law and order and the shortage perhaps as well, like the legal framework and also the fact that there is a shortage of housing that makes this model viable. If I'm not mistaken, the buy to let was a concept that was introduced in the year 1996. And one reason behind it was to sort of encourage the foreign investment, the even like the local as well, to sort of encourage investing more in property section to help with the housing shortage. Is that something that sort of resonate makes sense to you?
Yeah, absolutely right. I couldn't have sort of summarized it any better. I think in terms of any property investment, supply and demand, obviously, it's an obvious statement, is absolutely key. And within the UK, there just isn't enough new build properties to cope with supply. Again, it's something that we've touched upon before, isn't it? About the fact that it is, from a population standpoint, a growing nation through immigration, through an aging population base. But again, I think it's something we've touched upon in previous episodes, is that want of UK people. They're very aspirational in terms of wanting to own their own property, both from a residential point of view, but from a buy-to-let standpoint. It's tried and tested in the UK over the course of the last 30-40 years that it works as an investment tool. And in terms of comparing it to the likes of continental Europe, where there's many countries where people grow up knowing that they're just going to rent their whole life, and that the ability to buy certainly city centre location properties is just not going to, or it's unlikely to happen. Within the UK, as I say, we grow up with that thought that it will happen, and that we will buy more than one. In terms of growing property values, it is the case throughout the world, but it's that political, economic stability, legal framework that the UK is famed for. I think that if you spoke to people, no matter where throughout the world, they would say, yeah, it is a very stable environment. That's being tested at the moment, but it will continue to be like that. Inflation and interest rates tend to stay relatively stable, again, in comparison to a lot of countries that we actually deal with investors from, who see really high inflation rates, high interest rates. In this country, it is, the fiscal policy is really good, and it's kept under control.
Another thing that, I mean, I think I mentioned this before when I talk to people like from my father's generation. I'm very close with my father. We do talk a lot, so please bear with me if and humor me if I keep talking about that as an example.
It's
Uh,
good to hear.
yeah, but the mortgage is something that he has a bit of an issue. Loan in general, debt
Yeah.
overall, it's a bit of a scary territory. Uh, and to add salt to the injury, is that how you say it? We were also talking about, yeah, sorry, yeah, that
Yeah,
in
yeah.
to the I think I was trying to explain to him the interest only, and as one of the option, and repayment sort of loan, and these are the two options that are available. I think majority of the people are familiar with capital repayment or repayment sort of mortgage, which over the course of, here in the UK, normally 25 years. Over the course of 25 years, you pay off the capital, the principal that you borrowed, and the entire interest that you pay. So at the end of the sort of term, at the end of the 25 years, you have paid it all. There is also another option, which is interest only. I don't know if is there any chance that you can explain these two options to our viewers as well?
Absolutely. I think it might need a whole episode, and it probably is a worthwhile one us doing, actually, to go through the differences between interest only and repayment. Now, the vast majority of investors in the UK will do it on an interest-only basis. So basically, you are simply just repaying the interest on your loan every single month. The underlying loan doesn't get paid off. Which when you introduce that as a concept to someone that doesn't understand it, can be a difficult conversation to try and explain. But it's all about property prices rising. It's about the ability to maximize borrowing, but you're looking. If we looked at an example purchase of £200,000 now, and you're taking a 75% interest-only mortgage, £150,000 loan. If you're holding that property for 10, 15, 20 years, the value of that is going to double, if not treble. So your underlying debt will remain at £150,000, while your property value will go from 200, 250, 300, £350,000. So upon the point of sale, you're going to be benefiting purely from the capital growth. So if you're selling that for £350,000 in 10 years' time, you've still got that underlying £150,000 debt, but you've profited to the tune, you put £50,000 in, you're taking £200,000 out. You're making £150,000, and it's meant that your monthly income as well has been to a decent level. Because if you're paying a repayment mortgage, potentially on £150,000, you might be paying £700-800 a month. On an interest only, you're paying £300-400 a month, for example's sake. So you're benefiting on a monthly basis, income-wise, by £300-400. Because the maximum level of loan is 75%, there's never going to be any issue of negative equity, because property prices will rise in the UK. And a lot of UK buy-to-let investors never have a defined exit strategy of selling the property. Their view is that they're building overall wealth. They are going to own those properties until they pass. So that underlying debt, the longer you own that property, for all intents and purposes, the less it's worth against the less it is against the value of the property. So it just allows that ability to leverage more. It allows the ability to buy more properties because of your lower monthly payments. All of my properties that I own is on an interest only basis, and I have no qualms about that, and I wouldn't look to do it on a repayment basis. I don't know if that made a lot of sense there, but
it did. I think maybe we will do one session where we brings a bit of a visual aids and I think show it on the screen, and I think that will do a better job. I do have some numbers here. I was looking at just as a sample. If you're looking at I don't know, let's say a property, like you said, £200,000,